Hello everyone, it is Tuesday, December 1st. I just wanted to go over a few charts tonight, starting with the SPYs and the QQQs, and then one ETF, the Spyder Industrial, and then 4 tickers, Tesla, Hubspot, SRPT, and Docusign. So starting off with the SPYs, here is the daily chart, and obviously all the indices have had a tremendous run in November and even before that. So they are very extended, and many people are expecting a pullback or some sort of crash or assorted bad things. But as much as I'm not really comfortable with the underpinnings of the move we have had, the indices continue to show strength and certainly no signs of exhaustion. So on the SPY daily, you can see we're only on bar 4 of a new sell setup and on bar 6 of a countdown sell. More importantly, there is this secondary exhaustion level that dates back to the completed countdown sell 13 that you see here. If tomorrow the SPY open higher and make a higher high, meaning they go above that by 1 tick, this line will, the break of this line will be qualified. And it's not an end-all signal, but it's just another sign of strength underneath this move. Lastly, on the daily chart, you see this thin green line here. It's a TD line, and it has been broken on a qualified basis, and it projects up to 378. Moving on to the weekly chart. Here again, no real signs of exhaustion. The sell setup 9 did get a bit of a reaction, actually quite a good reaction, but then it could not be sustained, and now there is another sell setup ongoing, and we're on bar 7 of a countdown sell. Moving over to the QQQs. We'll take the daily first. Here again, no signs of exhaustion, only bar 5 of a sell setup. There was a lot of chop with no counts since August, and now finally it looks like the trend has reestablished itself. Also here, another TD line that was broken on a qualified basis, and this one projects up to 322.66. On a weekly basis, similar story, completed sell countdown over here. Secondary exhaustion is all the way up at 335. A bit of a reaction initially off of the completed countdown, but then buyers step back in, and here we are on bar 5 of a new sell setup. Now, what's interesting here is that if this were to go to completion, it would print a clean 9-13-9 signal, and those tend to be very bearish if we are talking about sell countdowns or sell setups, and vice versa, obviously, if they're buy setups. So maybe there is more room, but if it goes to completion, it could also signal a pretty important top. Moving on to the Spyder's Industrial ETF, which I am long. We'll look at it on all time frames, daily, weekly, and monthly, starting off with the daily. Nice pattern, completed 9. There was no response to the 9. Now we're in the middle of on the countdown sell. Now there is a buy setup that did start, and we'll have to watch that. These two thin lines, this one right here and this one right here, are the first level of support where it should hold. And we'll see if this one cancels, and it's probably going to be a positive thing, and if not, we may have to reconsider. But on a weekly basis, if I recall from looking at it beforehand, yeah, things are much better shape. Completed 9 here, a little bit of a pullback, and off starts the countdown sell, and also an overlapping sell setup. Note that it is also above the last applicable secondary exhaustion line. This level has not been broken on a qualified basis. That's why it's still dotted. But everything looks pretty good. And on a monthly level, for those who are interested in the infrastructure rebuild theme, very early in the process. Qualified break of the secondary exhaustion from this 13 count, and now off on a new sell setup, bar 6, so still very early. This one could run for quite a while. Turning on to less bullish things, the first chart that I want to look at, and it's everybody's favorite gambling chip, is Tesla. So I haven't touched Tesla in a while. The few times I did get involved, it was on the short side with put structures, and it was just too much work to stay with it. So I'm not sure I'm interested in getting involved again, but if I were, this probably would be the right time. So on a daily basis, you can see a completed sell setup here. The applicable secondary exhaustion has been broken, but not on a qualified basis. Going on to the weekly. There is a 13 that printed, or it's printing right now, with secondary exhaustion at 661. And the target for this broken TD line is up at 601. It has already been met. So yeah, there is a new sell setup ongoing, but right now the prevailing indicator is the 13 that you see here. And then on the monthly, another 13 sell completed a couple months ago, and what it's doing, if I read this in sort of the classic fashion, which is, very powerful move, is probably going to run up to secondary exhaustion. You can see that it's approaching it at 675, and we'll have to see if it gets there and then what happens when it gets there. But this is a rare instance where you can find all three time frames, daily, weekly, and monthly, lining up to the exhaustion side. I hesitate to say to the bearish side because obviously this move has been parabolic, but at some point moves do end, and when you can find charts that show exhaustions on different time frames, I think it's particularly worthy to keep in mind. Next is a similar stock, another company that I tackled from the short side, and again, it ended up being way too much work to stick with it. Although I actually think I did make a little bit of money on this one. And it's Hubspot. Again, daily has a sell setup. The TD prop up target was met, and we'll see where it goes from now. Obviously, the expectation is that the countdown will complete. So there is that to keep in mind if anyone is inclined to short it, but there is a little bit of exhaustion on a daily chart. On to the weekly. 13 completed here and another 9 completed here. Now, when you have overlapping 13 and 9s, they're sort of contradictory signals in the sense that this does show upside exhaustion, but the completion of a new cell setup also implies the eventual completion of a new countdown cell after a pullback. So this would be bearish, but then this would be bullish. So it's somewhat inconclusive. And the risk of going short right now is that the secondary exhaustion from this 13 signal is all the way up to 507. So again, yes, there is exhaustion on the daily time frame and some exhaustion on the weekly, but there is quite a bit of risk remaining to the upside. And finally, here is the monthly, and I'm showing it because to confuse things even more, here you can see a clean 913.9, and as I was mentioning earlier, these are very powerful. This is a very powerful indicator. It is really unusual for this indicator not to result in a significant move in the opposite direction. So in this case, we would expect that the stock will pull back significantly. Here is your 9, here is your 13, broken secondary exhaustion on a non-qualified basis, hence the dotted line. And here is the new 9 just this month, or well, we're in the middle of of bar 9. So if you're brave and you want to juggle some sharp knives, this may be one that with some patience may work on the short side, although again it may require some serious juggling of least options to protect your upside that shows on the weekly time frame. On to two stocks that I am involved with. One is Sarepta, the gene therapy company. It's been all over the place. And here too, it's got some interesting looks on 3 different time frames. The daily, after chopping around for a long time with a deferred countdown buy, it finally completed over here. As you can see, it held very nicely. And now we're in the middle of a new cell setup. So this is textbook, excuse me, this is textbook bullish behavior. Going on to the weekly. Same thing. There is the countdown buy triggered by this buy setup is still ongoing, but the stock does not seem to want to turn down. So here it has started a sell setup. We'll have to see obviously if it completes. If it does, then it would wipe out the requirement or the expectation that the buy countdown will complete. What caught my eye here is that Sarepta has responded very well to exhaustion counts. So here you see a 13 and a 9, and boom, the price went down. Did not show any ability to recover or to start and complete any new setup counts. Started a new buy setup, and here's another 9 to which it ultimately reacted. Another 9 here, reaction again. The 13, which was expected from this completion, made it, took out the TDST level up on a qualified basis, and now off of this 13, the plunge again to the 9. So I'm inclined to stick to the long side of this one, at least until this newly started sell setup either cancels, in which case I'll probably pull my horns in, or it goes to completion. And then finally on the monthly, completed 13, a 4 count on the buy setup. This looks tired. So, you know, I think we need to respect what the larger time frame is, and watch it closer. I'm staying long based on the daily and the weekly, but I recognize that you know, there may be a lot of work to be done on a monthly. On the longer term, there may be a lot of choppiness also. You can see that the stock tagged this level here is 122.75. That is the prop exhaustion down, which when is not qualified, it's not a target, but it is support. And indeed it held. So if you want to play against a particular price on the long side, this would probably be a good level to take into account. And lastly, Docusign, which has been a beast, as all the software names and the stay-at-home names have been since March. It reports after the close on Thursday. It has been a very volatile stock. I'm involved, but kind of flattish. So basically, I have some upside gamma options. Well, not going to get into the options tonight. On a daily basis, you can see that there is a deferred 13. And we got very close to the secondary exhaustion level and the prop exhaustion up target at 239.72. And then today there was a nasty reversal, kind of textbook off of this 9 sell setup, and it did put in a price flip. So the count started, a new buy setup count started. I'm not really inclined to pay too much attention to the daily, particularly because they report in a couple of days. So I rather look at the weekly, and the weekly again has a 12 on the countdown sell and a price flip. It is not unusual for countdowns to not print a 13 and price just turns at bar 12. We'll have to see. The reference bar is 8 is here. So, you know, it might complete, may not. I suspect it will complete. But this looks tired. And on a monthly basis, not much. The countdown sell is still in place. This little price flip, and let me take a look here. 223. Yeah, the TD reference close at 223. Without getting into the weeds too much, it is interesting that price today turned right at that TD reference close price. We'll see. Bottom line, it's very volatile. It's incredibly expensive on a fundamental basis. and it's starting to look tired. There may be one more blow off to the upside to complete the upside exhaustion counts, but this one is looking risky. So to sum it up, the indices, as much as they've ramped really hard in November, are still looking pretty healthy. And as much as I would love to fight them, I'm very careful because it can be very painful to short a runaway market. Tesla, again, it's a juggling act. If I were to get involved again, this would probably be the right time to short it. And the one that looks the best, in my opinion, is the XLI on the long side. May have both fundamental and macro tailwinds, and the charts look pretty good. I hope this helps, and I will talk to you soon.